Good morning everyone, welcome to the free pre-market report for thank God it's Friday. What a day in the markets yesterday. A lot of reaction to all the data that was coming out. I mean, even though there was no changes, everything that we can look at here is a reaction to risk aversion. There is fear in the markets, people are fleeing to safety. Fortunately, we was already positioned for this, so when the move broke, we was there to take full advantage of it and have had, one of our best trading days for about 4 or 5 months. So that's really nice. We want to remain grounded and centered though, so a quick look through the markets. S&Ps, we took out the Dubai World lows here, and let's get some targets now. We've already sold down at these levels here. We did it last night at 10.60. We sold a third of this position, so we're holding just 2/3 of it now, which is a great trade, and I'm just now looking for a move down to 10.36. What could sort of scupper this would be, remember today we have I'm just getting my notes because I want to look at some other stock for you. We've got non-farm payrolls out at 7:30 Eastern. We've got Canadian employment data just before that. So if we get good figures there, I think that the sort of consensus is in the US is going to be the big mover. That is meant to be 25,000. Great. If we get sort of like 75, 100,000 jobs created, then that we could see, a big bounce higher after what's happened. But I'm happy to sit in this position. We're nicely in the money. This is trading. There's risk out there at the moment. People are fleeing risk. If you haven't really already got short, I mean, a retracement back if you get one to 10.63, but with non-farm payrolls out today, I'd just wait. Let's get these figures out of the way. I mean, you're going to probably miss the trade because it's either going to spike higher or it's going to move lower depending on the figure. So it could go sideways, has done in the past, but I think the trade's probably been missed there. But they'll come along again. Targets now, as I say, next target down at the 200 at 10.35. So resistance that I can see is this former sort of spike low, and this from back in December and back this week at about 10.63, 10.64ish would be a level. If we go down to a 60-minute chart, so we've got RSI here right, on its lows. That's to be expected. And again, they're supposed to, on a 60-minute chart, we would have some resistance at 10.58, this former support level, before it rolled again this morning. So yeah, looking weak. Not really much more to say other than hopefully you took the trade, you were positioned in it. If you weren't, not to worry. This happens. This is trading. We all miss trades now and again, but certainly we're on the brink here, and the markets are really moving away from risk. Another great day. And you heard me speak yesterday. I'm going to discuss everything in depth in the members video. So if you're not a member, all you need to do is just go to the homepage of the Genius Trader website and take the 1-month guest membership, and then you can watch the in-depth market report. But this is a really exciting time to be trading. So Euro, US dollar, we're through. I mean, we're just ripping through levels one after the other. We've taken out this level here, which was the June low. The June support level, shall I say, of 09 at 137.53. We're through that. After that, we have 129, which is just incredible. Let's go to a weekly chart. Here we have it must be a moving average. So yeah, we're sitting right on the 200. So obviously a key level now where we're through it. In fact, we're like it's gone through every other level. But 137.43, the 200 week exponential moving average. You would think at some point this stock would surely try and get a bit of support here, but there is fear in the market. People are just offloading the euro, as I discussed in my blog earlier in the week. And we've been speaking continually about this. And some of you must have thought, yeah, okay, it gets pretty boring, but we've been paid for this move. We've had a great move from 148, and it's just a good day to be trading. But there will be bad days, of course. We got absolutely, ripped out of gold. Unfortunately, we had a third of a position size, but we took a 20 points loss on that. But the rest of the positions made up for that plus, which is great. So good day to be trading. There's going to be what we perceive as bad days. But now, you know, it's just a thing where you know, I'm saying, you know, I don't expect too much from a trade and keep it real, and then someone really needs to make money and they get ripped out of that gold trade. You know, they're just saying, why don't you shut up, you idiot? You know, I'm trying to make money and support my family. So it's easy for me to sort of sit here and preach how to trade, but to trade in an optimal state, we've got to sort of have a few positions on, let go of our expectancies for them positions, and when they come in our favour, just try and remain grounded. You know, be honest, like everyone, I get a little bit excited when I see everything move in our favour like this, but you've got to sort of just get back into that centred, calm state before you make another trading decision. Okay, everyone. That wraps up the free pre-market report for Friday. Again, you know, please, at the bottom of the narrative, there's also a link you can use to get the free complimentary guest membership. PR company said don't use the word free, it makes the product cheaper. Well, if I don't make the product cheaper with being involved, then does it really matter? Everyone have a great weekend. I look forward to speaking with you next week. Till then, happy trading.